How do capital expenses for medical care impact my taxes? Imagine you or your loved ones need a big medical upgrade, like installing a wheelchair ramp or modifying a bathroom for accessibility. Did you know these costs might help you save on taxes? That's right. When it comes to medical expenses, some large one-time costs are called capital expenses. These are expenses for assets that last many years, like home modifications for health reasons. But not all medical costs qualify as capital expenses, only those mainly for medical care. If you pay for a home improvement that helps with a medical condition, you might be able to include part of that cost as a medical expense on your taxes. For example, installing a wheelchair ramp or widening doorways for a wheelchair user can be considered. However, the IRS says you can only deduct the part of the expense that exceeds any increase in your home's value from the improvement. So, if the home upgrade adds $5,000 to your home's value, and the total cost is $10,000, you can only deduct $5,000. To qualify, the expense must be primarily for medical care, not just to boost your home's value. Keep detailed records, including receipts and bills, showing the costs and the purpose of the improvement. Also, only expenses paid during the tax year count. If you get reimbursed by insurance, you cannot claim those costs. If you support elderly parents and pay for their medical modifications, those costs can also be included if they qualify. Remember, regular medical expenses like doctor visits, prescriptions, or medical equipment are different from capital expenses. Regular expenses are easier to claim, but for large, long-lasting improvements, you need to check if they qualify as capital expenses. You can include these costs when you itemize your deductions on Schedule A of your tax return. Itemizing means listing out all your deductible expenses instead of taking the standard deduction. Your total medical expenses are only deductible if they are more than 7.5% of your adjusted gross income. For example, if your adjusted gross income is $50,000, you can only deduct the amount of your medical expenses that exceeds $3,750. If your total qualified medical costs are $8,000, you can deduct for $1,000 to $150. This can help lower your taxable income and save you money. It's a good idea to keep all records of your medical expenses, including receipts, bills, and insurance statements. This way, you can be sure you're claiming everything you're entitled to. For Asian American families supporting multiple generations, these deductions can add up, especially if you pay for elderly parents' or grandparents' medical modifications. If you're unsure whether a specific expense qualifies as a capital expense or how to claim it, consulting a tax professional or using trusted tax software can help. They can guide you through the rules and ensure you maximize your deductions. Paying attention to these details can make a real difference in your tax savings and help you manage your income and deductions more effectively.